This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. A good day to one and all. I'm happy to see you all during a new week. Let me display the PowerPoint presentation. Asian session live market analysis on December 7th between 5 and 5:30 GMT. It is a simple market tracking technique using the live market code page. So I'll give the link for the live market code page. You can open it in a browser and see where exactly the market is. Let me display the or place the camera over that of the live market code page, and we will see how exactly the market has moved. Now currently Euro is around 1.488789 bid in the hour, and the low is 1.4851 and the high is 1.4897. There is a net change of 30 pips positive from that of Friday close. And you know what has happened on Friday? After the non-farm payroll, they made a very quick rise in the case of Euro and GBP as a false move. And as I have been explaining, that nowadays the players are making the false move after the data release, and subsequently many would have thought that they are going to make for a positive US data a risk appetite move, whereas they showed the USD gaining move in a massive way. And because it is December, even if the non-farm payroll would have been negative, they would have dropped Euro and GBP because they wanted to book profit and lower the levels to buy back at the lower levels. So the players were overbought and they wanted to exit out of their positions, and hence we found that a prolonged higher level consolidation had a break on the downside. Now with regard to the GBP, 1.6477 is the current level. 6481, 6477 and 6481 are the bid and the ask. Then 6426 is the low and 6505 is the high. And they are the initial lows and the highs set during this particular Asian session. And the net change is 2 pips positive. So you can understand that they have firmed up little bit of Euro from that of Friday close, and GBP just nominally up. Thereby, they are able to gain about 17 pips in the case of Euro GBP. Positive gain has been seen in the case of Euro GBP. Currently, Euro GBP is around 0.903437 call. The high is 0.9046. So here you come across on Friday, they came below that of 0.90, the psychological level, and subsequently they gained the levels now. And what they imply out of that, they wanted to make little bit of gain during the Asian session or the Japanese session. And subsequently, they intend to drop further down during the European session. Let me go to that of the forecast afterwards. Then in the case of USD-Yen, there was a prolonged demand that when USD-Yen is going to rise or it is going to drop further down, and subsequently we found that USD-Yen significantly gained on Friday. That has changed the entire scenario, and today you find that after rising to 90.75, USD-Yen has formed a high 90.41 today, and from there it has dropped nearly about 60 pips, and net change is 61 pips negative, and currently you find that it is holding around 89.92, 89.95, and it was forming an initial low, and subsequently it cut the low and just gone above that. So I will just refer to that of the initial highs and the lows, then you will be able to understand and read their intentions very clearly. In the case of USD-CHF, they made a significant rise, and again you find a net change of 18 pips negative. So when Euro has made a positive net change of 30 pips and USD-CHF has made a negative net change of 18 pips, So that indicates that they don't want to drop USD CHF more, corresponding to that of the rise in the case of Euro USD. And if you find Euro CHF cross, the net change is 3 pips positive, and it has come to the psychological level 1.51, even though they had dropped it significantly on Friday, and subsequently they gained the level to that low 1.51 area. So this is considered as a strong support level, and SNB is supposed to intervene in these levels. That is what many attribute. But they made a quick downward stop and subsequently made the rise in the case of Euro CHF. So whether there is an intervention or no intervention, the stop and is bound to happen, and the players are having their own trick of making money. In the case of USD CAD, he found a significant rise has happened from that of the low, and on Friday it was making a subdued rise when all others were showing USD gaining move, and subsequently they gained the levels in the case of USD CAD as well. Now currently the net change is 26 pips negative, and from that of Friday close, so it is also expected to gain up to it. Then in the case of Australian dollar, a nominal rise of 11 pips is seen from that of Friday close, and it is in the middle level. If you see most of the pairs, they are in the middle level. Only USDN was active during this particular Asian session, and the rest of the things are making subdued moves. So let us see how exactly the moves are going to be. In the case of yen crosses, many are interested in yen crosses, so let me add a note about it. So in the case of yen crosses, you find that net change negative of euro yen, that level of 66 negative, and the 133.69 is the low, and market is currently holding near that of the low. And in the case of GBP 148.17 is the current level, 148 the psychological level has become the low. 101 pips net change has been seen in the case of negative net change has been seen in the case of GBP. So you will find that weak beginning, that dip in the case of yen crosses, and subsequently you will find further rise in the case of USD yen, and a lesser drop in the case of euro and GBP, and more gain in the case of USD yen and other denominator currencies, and that will lead to the rise in the case of the respective crosses. So let me just shift the camera to the PowerPoint presentation. So what is the expected forecast for today? Japanese session initial rise, a nominal rise of 30-40 pips from that of Friday close, and subsequently slide moves are expected. Then European session initial slide and a quick drop is expected during the mid-European session. Then firm up moves towards close of the European session or the expected move. Then US session, a brief firming up and then slide or the expected moves. So subdued narrow range swings are expected for week beginning, and this is mainly to induce the traders to develop the uncertainty whether euro and GBP are going to drop, or they're going to rise, or we going to see the USD gaining move, or are we going to see the risk appetite move, and that sort of confusion they wanted to create and hold here, so that those who had taken already sell positions on Friday, and if they are greedy trying to book profit around the support, what they identify as the next support level, and if they hold without placing a buy limit order, then they will just firm up like this and create the uncertainty and induce them to keep the buy order. Similarly, you know that traders who were just exited out of the positions, they will think that okay, euro and GBP might rise again when they make a brief upward stop, and then try to take a buy positions. Afterwards, they will try to drop further down. So the current intention of the player, I was giving you the forecast last week that from 8th or 9th of December, the market is expected to reverse. But the way in which on Friday they had dropped euro and GBP, they wanted to just lighten their positions further. So when they want to lighten their positions further and they do not want to make distress sell, and they will hold the market and just book profit, hold the market and book profit without losing much of a level. And probably by end of this particular week, they will make again a massacre, or they will try to drop Euro and GBP quickly, and then from there they will try to trap from next week. So there is a delay in getting the execution of these trades by that of the players because of lesser volume during before Christmas holidays. So invariably, you find that there is a delay in their process of dropping as well as rising. So we need to read their intentions from time to time and adjust the forecast accordingly so that you will be able to take appropriate trading positions. So my advice to that of the traders is watch for the drop to happen, then subsequently you can go in for buy and sell trade, let them finish the drop and stop cutting the low for two sessions. Stop cutting the low for two sessions and see how exactly they handle the market, and subsequently take a buy position, so that that can be a good position trade for year end as well as for the new year. So on 11th, this coming Friday, I'll be discussing about the entire forecast given for the year 2009 and review that. At that time, I'll give more possible expected closing levels for this particular year 2009 in the case of Euro and GBP and also the other currencies. So as far as USD, Yen and the other denominator currencies are concerned, I have been telling earlier, avoid taking positions because they will be testing the patience for a long time. So now the time has come when you can take positions in the case of the denominator currencies. They will also make normal swings in the case of denominator currency, and thereby you will find the some of the European crosses like Euro GBP, Euro CHF and GBP CHF. These crosses will also make very good volatile moves, and also the yen crosses will make very big volatile moves. Then you will be able to find that good trading opportunities. So obviously, you won't be expecting the one-sided drop in the case of these denominator currencies again, and you will come across the swings. So during swings, so when they are near the low, probably you can try to take buy positions and try to exit when there is a quick rise, or keep stop at entry and try to do position trade in case if you intend to do position trade. But always keep in mind risk management of using the hedging until such time the position is making loss. And once the position makes profit, try to keep stop at entry and remove the hedging order. So hedging order will be using instead of stop in these trades. So this is the expected forecast. And now let me display the slide pertaining to the initial highs and the lows. And in the case of Euro, 1.4851 is the low, which is higher than that of Friday low, 1.4822. And then the high has been formed, 1.4896. And there was an initial drop on Friday, and you know that initial low was 1.4961, and they are not still gone above that. So anybody who has taken a buy position on Friday, they will induce them to liquidate their buy positions. In the case of GBP, 1.6426 is the low, 1.6505 is the high, and they have not made any big drop in the case of GBP, unlike Euro on Friday. And you know pretty well, this week you come across POE interest rate decisions, and so that will have an impact volatility in the market. And keep in mind, they intend to drop Euro GBP. So it doesn't mean that straight away they will drop Euro GBP. They will make swings, and whenever they make a rise, you watch, they stop cutting the high, and subsequently after two sessions when they are not cut the high, you try to take a sell position. Then you will be able to easily keep stop at entry and try to book profit in the case of Euro GBP cross. Euro GBP cross is expected to drop to reach the area of 0.88 And once it breaches 88, then we'll find the next support level of 0.84. Till such time, they will make a drop in case of, and they wanted to lighten this particular Euro GBP cross in a very big way. And the players have accumulated positions for a long time, and unfortunately the volume drained in the market. So they have gone to the next strategy of creating the margin calls and making havoc in the market. And again, the same volume problem persists and the December has come. Obviously, they cannot simply hold the position and say that we are in a greatest profit, because only when the positions are closed, then they will be able to show the realized profit. Book profit is of no use. You know that in the financial market, realized profit is being considered as a profit. So obviously, they have gone in for such offloading, and you find gold is one of the good examples. That it was considered during the USD weakening move also gold was rising, and during the risk appetite also gold was rising. And on Friday they made a big drop in the case of gold, and this morning also they made further drop in the case of gold. And you will find that gold will fall like 9 pins. So in the case of USDN, I was telling you 89.83 was low, and subsequently they formed a new low, 89.81, and then they are holding above that. So they will quickly make a consolidation in this particular area. And those who remember that on Friday when they made the rise in the case of USDN, they rised quickly to that of 89.77 and subsequently made a drop to 89.57 and then gained again to 90.70. So they will see that those who have taken a sell positions below that, they are not booking profits, so that they will be able to come for short covering when they make the rise in the case of the USD and also corresponding yen crosses. And the case of Australian dollar, and you know that when gold was rising, Australian dollar stopped rising, and that shows very clearly a lot of people have taken long positions in the case of Australian dollar in the name of carry trade and in the name of buying the currency from low interest countries and investing in the high interest countries and things like that. And this sort of hypes have now been explained, and those who have taken the buy positions at the higher level 0.9392 area, they all will be forced to book losses, even though the interest what they would have gained after the high would have been very, very nominal, but they will be having a big problem of liquidating their positions. So this is how they create in the financial market always a hype, and it will appear as if even a child will be able to do this sort of trade. And you know that in the case of Japanese yen and yen crosses, they gave the example that Japanese housewife were doing this sort of trade of carry trade. And subsequently what happened, you know that yen, they dropped it in a very big way, and also the yen crosses and trap all the people. So when they give such examples, don't tend to believe. And nobody has seen whether really Japanese housewives have done that sort of trades. But that is how they will create. Instead of telling that it is a child's play, they will use this sort of phrases and confuse the traders in the market, and don't tend to believe it. And if they give such explanations, then you have to ask in yourself, okay, if there is a great potential of earning money by doing that sort of trade, why they are divulging that particular secret to us instead of they becoming billionaires? Then USD CAD 1.0534 is the low, 1.0576 is the high, and USD CAD is expected to gain significantly today and lead the way further up in the case of USD gaining move. So let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take up the questions which are asked. Okay, Smith has got a question. Is there any chance regarding USD yen to revisit 87 area before continuing the one-sided rise mentioned by you. See, they made a big rise and they're done a shift in trading zone and they may not visit 87 area and probably they will hold the 89 and subsequently make the rise. And will it be correlated to stock market? Yeah, in future you will kind because in 2003, 2004, and that was the saying, whenever there is a rise in Dow Jones or any of the stock market, they will immediately correlate it to yen or the denominator currencies in general. And subsequently in 2008 and 2009, they started relating to that of euro and GBP. So they give a logical explanation when euro and GBP are rising that US dollar is put under pressure, and similarly you find the stock markets also rising, and that sort of excuses were given, and probably a new excuse will be given in the coming days that the denominator currencies could be related to that of the stock market. So these are all nothing but attributes. It is something like comparing the donkey with the horse. Okay. Do you see Euro USD moving up and down in excess of 100 pips, or do you see smaller swings? Today, I am expecting smaller swings in the case of Euro GBP, and the spread between the high and the low could be around 100 pips. On Friday, market went beyond 150 pips. Yes, there is a low liquidity, and they always take the relaxation of the leverage or relaxation of the spread from that of the interbank treasury and try to make 250 pips moves, and in order to get that liquidity, and this is prevailing practice even in the stock market, and that will get adjusted with regard to the weekly spread, and it will not go beyond the weekly spread. If you have taken the high and the low for the week, it will be within the limitations of the weekly spread. Then after your comment, it is possible to drop below 1.48 regarding euro somewhere. Yes, there is a potency for euro to drop below 1.48, and that is why I said that let us calmly read their intentions, probably avoid taking positions during this uncertain time, and let us see how exactly they are dropping. And probably small trade can be done using the hedging, but otherwise if you simply take positions and later on without any protection and try to blame me, then I become helpless. So that is why I'm not giving any trade call now. Otherwise, normally near high you can sell and near low you can buy. You know that when the low and the high are not being cut for 30 minutes to 2 hours. But now a downtrend is being set and the players wanted to lighten their positions and they may not buy aggressively. Okay. Do you say that Euro Yen and GBP Yen will rise before the drop towards end of December? No, I did not say that the Yen crosses will drop by end of December. I was telling all along that Euro and GBP are expected to rise, and also the denominator currencies are expected to rise. As a result, the yen crosses are also expected to rise. So you will find swing and rise moves in the case of yen cross. Okay, Smith. Regarding gold, further drop is expected in this week, perhaps 1100 area. Yes. There is a great potency for gold to come to 1100 area. And you know that commodity you find invariably the one-sided moves in a very, very drastic way, unlike that of the currencies, because the volume is very less in the case of commodities and IMX, and you find that the players, when they start unwinding the positions, when the new levels are seen, and subsequently those who are holding the positions also try to unwind, and they will not try to give a support to the market. So in that process, normally a rise takes about 1 to 2 months and the drop takes about 2-3 days, and you will find all the gains would have been wiped out in no time. That sort of moves will be seen in the case of commodities. So keep in mind that even crude is expected to drop. And earlier, that it came to that level of 53 area. Now it is holding around, it went up to 85 and things like that. And now it is around, holding around 75. It is also expected to get the unwinding for year end. So predominant of the people who have been doing the carry trade and holding the positions, okay, there could be a further rise during the year end, and they would have seen that before their expectation of the levels, the market has started correcting, and when it is not rising, they will try to liquidate slowly. And when they liquidate all the positions, the players may not give a strong support to the market. Okay. Is there a delay in the reversal? Yeah, there could be a possibility of delay in the reversal about this week. So let us watch till midweek and reassess. Do you expect Euro and GBP to cut 1.4864 area? Yeah, there is a great potential of Euro and GBP drop for the down this week. Would the week beginning false move apply today? Yeah, week beginning false move is there. Now they made a nominal gain, but you know that they are not supporting it strongly. They gained only 30 pips, and if you see during the European session, if they gain significantly, probably there could be some support coming out. Otherwise, they will let loose the market. And probably when gold weakens further down, then they may not. People will be afraid of buying Euro and GBP because all people always tend to relate the markets either this way or that way. So invariably they will get confused and they will try to lessen their positions. Whatever the positions they have, the huge funds, what they have blocked in the market, they will try to unwind and realize the profits. And those who are doing currency conversions will also try to come into play and they will also try to convert it. So that sort of trades will not do any short covering or profit booking and things like that. So you'll find predominant of that sort of liquidity is going to happen in the market. But unfortunately, it is going to be a thin volume, so you'll find more volatile moves in the market because it is December. Do you just say that USD will revisit 87? No, I did not say it will revisit. It will not revisit 87. That's what I was telling. So probably 89 could be the low. And once they start gaining the levels, you will find that they will gain the levels in the case of the significantly. Okay, you won't blame me if I give calls, but it is not invariable. See, I have found out one thing as far as the emotional traders are concerned. When I give the levels, immediately they think about the level. Even if there is a shortage of 50 pips or 100 pips, immediately they try to point out the finger rather than trying to manage their trade and earn money out of that. And that sort of maturity has not come into that mindset, and impulsive trading is happening. So I do not want to see for the sake of some refined traders if I give, but some of the newcomers or some of the people who are highly emotional and perceiving the market with a different perspective, they get highly agitated. And it becomes a big task for me to control their emotions also. See, I have to do a remote control of their emotions. So instead, I want to avoid giving it. And those who are very particular about the levels and things like that, you can send me an email, then I will be willing to help you out. What is your view on Euro Yen? Euro Yen, less drop and more rise could be seen. What are the expected range of GBP USD in this week? See, I am expecting a drop below 48. 48.22 was considered as a strong support and they are expected to break it. And later on we will see. See, as far as the emotional traders are concerned, MACD as an example on Wine's webinar. No, it is bound to happen, but it should not distract the attention. That is what I want. So If I avoid giving the calls here in public, then obviously those who are interested can send an email and I will give the cautions with regard to the levels so that they will not come and openly comment. Because I do not want those emotional traders also to lose money. So I feel hurt when they lose money. But I will try to pacify them and induce them to do controlled emotion, develop controlled emotion condition and trade. That will be the better way of. See, you know that a teacher is the one no, who will always focus on the weak students rather than the bright students. Bright students, the teacher will teach, but at the same time, the weak students, the teacher will try to give more attention. Is USDN gaining moves continue for rest of the year? Yes, USDN is expected to gain significantly. And there will be swings. Don't think that there will be one-sided move straight gain. And this sort of big beginning false move could happen and subsequently rise will happen. But less drop and more rise should be seen in the case of USDN. Then Euro AUD is just across, not in our focus. Yes, I am not tracking it fully because all the pairs I will not be able to track. And I want small traders to focus only on the majors and the two commodity pairs. And if the equity is extraordinarily big, then you can think of trading in cross. The crosses might give good spread for you to earn quickly money, but at the same time they can make massive moves in the case of crosses. And you may also equally take the risk. Okay, as far as Euro AUD, Euro long and AUD short because AUD is lagging behind after the big buy. So this is a trading strategy you can think, but what I suggest is use the hedging. Sorry. To use the hedging in the event of risk management. In the trading, if you want to use the hedging, you need to use it very clearly. Otherwise, if you gain money in one position and lose money in another position, then it is of no use. So obviously, you try to develop the market perception and try to develop the market reading to a certain extent. And I also giving the calls and giving the expected market moves in the blog and read and try to develop the market insight. Then accordingly take positions without having too much of emotional bias. Do you see shift in trading zone at a higher levels for next year? Yeah, there could be a shift in trading zone, but before that, there will be year beginning false move, in the month of January. And so it's similar to that of the month beginning volatile move, month beginning trend reversal. You come across the year beginning trend reversals. So year beginning trend reversals will happen for 2 weeks of the year beginning, and that will be a false move. So there will be a quick drop and subsequently the rise is expected in the case of Euro and GBP. So watch for those levels and calmly trade. And if you are taking buy positions, try to see that you are using hedging and try to limit the risk. And when the hedging is filled, hold it for some time and see whether the hedging is making profit. Then keep stop at entry, whether it is a sell or a buy. Then try to book the profit when they move the market against you also in the hedging, and then subsequently wait for the rise to happen in the case of the new year. So just like that, they will not give profit. You have to keep in mind that the players are making the tricks in the market. Just like that, they will not definitely give easy trading solutions or conditions for us. So we need to invariably keep in mind that the trading will be stressful, but we have to develop the overall picture of the market so that it does not give you much of a surprise. How you can avoid getting the surprise? Understand that market can come down or go up. So in the event if it comes down, what are the steps I have to manage my risk? And in the event if it goes in my way, what are the ways by which I'll be able to maximize the profit? These solutions if we hand beforehand, then you will not find that stressful condition in the case of trading. So more than the forecast and the market reading, I give importance to that of the trading strategy. Okay, Eric. Uh, Someone took buy trade at the low of euro on Friday. Should they get out of or do the hedge? Can euro go? See, when a profit is seen, why not you book profit and then you re-enter rather than making the trade more complicated? You try to trail the stop. So instead of expecting 1.4950, you try to trail the stop. And when the trailing stop rising, understand that beyond that they are not rising, then try to close the position. So these are all that insight you have to develop it. What you are saying is that it is not good time to trade now. I'm not telling that it is not good time to trade. You spend more time in watching the market and spend less time in taking trades so that it will be less stressful. Otherwise, no, they will be holding it for a long time. After taking a position, you will also be watching the market in tensed condition for a long time. Why such a situation? Okay. Can you go over either way trading again and using hedging strategy? Yes, definitely you can do it, provided you know how to do that either way trading. Would you recommend any particular technical study for use to combination of your forecast and trading strategy? See, every technical study has got its own limitations, and that is why you come across innumerable technical studies, because no technical study is able to really explain the changing market conditions from time to time. See, what are the studies which are developed about 100, 150 years back? They were all, the market conditions were totally different. Now it is electronic and the market can move in a very, very different way, and the volume also suddenly increases and decreases. And this sort of conditions were not prevailing when this sort of statistics were applied initially in the markets. Basically, these statistical studies were developed for population study, because we do not know how the population is going to propagate. For that, these studies have been developed and subsequently modified and used it in the market, but they have got limitations. So I will not recommend any specific statistical study. For that, instead, you watch the live market code page. You can make your study more and more simple rather than trying to calculate the levels based on support and resistance or pivot points and develop a mental block with regard to those levels, and when the levels are not reached, you become surprised or disappointed. Don't trigger your emotions. Okay, my email address is given in my website also, and dr@iknowindices.com is my email ID. Okay. You said that your blog that after non-farm payroll, players will make USD strengthening move and not risk aversion. Yeah. See, from time to time, you know that they use different terminologies in the market. See, the market can only make two types of move, either an upward move or a downward move. But for an upward move, they will simply say that earlier they have been telling it as a bullish move and a bearish move in relation to that of euro and GBP. And subsequently, they started using it as risk appetite and risk aversion. Then they will say, okay, it is USD gaining move, USD weakening. So from time to time, they have to give different terminologies. Only then the market will look interesting. Otherwise, it will look like the same old market. That is some of the financial strategies. They try to adapt such words and spread it, propagate such words. And all the analysts find that it is really helpful using those words. Without understanding, they are trying to create a bias among the traders. Euro yen went up last Friday. Just now I did not hear you clearly. Did you say that less drop and more, yeah, less drop and more rise moves are expected in the case of the yen cross? The monthly net change limit of euro is 600 pips. Can you expect euro to move down only up to that level? Yeah, there would be a drop in the case of euro, probably about 200 to 300 pips. Not very big move because it's less volume condition and the players want to hold the levels and book profit. Generally, how long do you overall bullish market conditions affect stock market take? When can we see good downside corrections after 2009 bullish sentiments? See, it is not the question of the bullish and the bearish sentiments in the market. See, it is a question of trading. So the players they are all sitting on US dollar. Keep in mind, the players all have the reserves in US dollar. So they spend the US dollar and buy other currencies, stocks, etc. and liquidate. Then afterwards, they just avoid giving the support to the market. The market will have a free fall. They will induce the market to drop very fast. Then subsequently start buying again. So as far as they are concerned, they do only buy and sell trades. We only call it as bullish market, bearish market, etc. Is it wise to open a short when they cut the high for 20-30 pips? In the case of GBP, yeah, you can do if you identify that it is a stop and they are coming below that of the initial high in less than 30 minutes. Then during such firming up move, you can take a sell position, but use the hedging to limit the risk. Is this Friday move seen as a pullback? Nothing like a pullback actually. It is just unwinding the positions. It's more of unwinding the positions by the players. New terminology came after the financial crisis. Yes, every time they will try to create new terminologies and you'll find that those terminologies will capture interest, and anybody who does not use such terminologies may not be considered as a good analyst. That sort of thing will invariably create the market condition. When Bloomberg and others started using this terminologies, then others will tend to follow it so that they are up to date. Then later on you find that they are unnecessarily confuse the traders. That is why I always say that knowingly or unknowingly, some of the analysts support the players. Unwinding the positions means, yes, taking profits. I think I have taken more time. So let me display this slide again for the benefit of those who have come late. The forecast. The Japanese session, the rise and the slide move. Then European session slide, then quick drop, then followed by firming up move as a pullback. Then US session, there will be firming up moves to start with, then again slide. Subdued narrow range swings are expected today, and tomorrow there could be a good drop expected in this market. So let me take this opportunity to thank everybody who have come here to listen to my talk, and I'll come again tomorrow and make the analysis of the Asian session and give you further explanations pertaining to what I read it from the market. See you all. Wish you happy trading.